just to say that you guys know who River Health Partner is in what the Africa Payments Club is, and that we look to really develop a tradition of setting up those events. And thank you to obviously to Jimo for sponsoring this particular event. And without much ado, I'll pass on to Jeremy.
Thank you very much, Snezhina, and good afternoon, everyone. Welcome to today's edition of the Africa Payments Club Roundtable. So here, Snezhina has said, we have key discussions by bringing together payment ecosystem leaders and influencers to explore mission-critical topics and address points with the ultimate goal to accelerate financial inclusion. Welcome once again. My name is Jeremy Quainoo, and I will be moderating this session. And I also happen to be the country director for Jumo in Ghana. Now, Jumo is a fintech that partners with banks and mobile network operators to provide innovative financial services to the mass market. And I am joined by all you highly esteemed and seasoned panelists from various industries who are sure to make this a truly insightful discussion. So let me start with introductions for those who might be observing from all over the world. First, we have our only lady panelist, Daisy Mwanzia, forgive me if I don't pronounce the names well, who is a banking specialist for Fintech and Financial Services at the MTN Group. Hi, Daisy, once again. Then we have John Mark Sebunya, who is the Senior Manager for Fintech Architecture, also at MTN Group. Hello. Then we have Kayode, who is the Head of Transaction and Electronic Banking at United Bank of Africa, joining us from Côte d'Ivoire. Then we have Ebele Okeke, who is the Managing Partner of Altica Partners, joining us from Dubai. And last, we have Arnold, who is the Country Director for Jumo in Ghana. Did I say last? I think I'm leaving out John Charles. And we also have John Charles Yallet, Director, Consumer Private Banking and Business Banking at Standard Chartered. Welcome, everyone. I think I got everyone, right? Great. So we have a fair distribution of representation from the financial services industry, the telco industry, and fintech as well. Let me preface this conversation by saying that our topic for discussion today, which is using technology to unlock financial inclusion in Africa, is a critical topic of discussion globally. Financial inclusion is a critical part of Africa's sustainable development goals and poverty alleviation initiatives. And we believe that at its core, financial inclusion is fundamental right, at least in my company, that is how we feel. However, right now, financial services and products aren't really being as expanded at the rates that we would like to see, and there still remain some challenges and barriers for the excluded population, anything from formal identification, relevant products, even geographical access, and which are among the barriers that are holding back inclusive advancement. But what does this all truly mean, and what should we be implementing and thinking about as we leverage technology in our various industries to unlock further financial inclusion, particularly in West Africa? So that will be the overarching question that we'll be to answer in our discussion under the three broad themes of our outreach, infrastructure, and regulation. So let me with Daisy, our ladies first, right? So Daisy, what has your company's level of involvement in the area of financial inclusion been so far? I know in Ghana, particularly, mobile money is essentially leading the pack, but considering that you have insights over various regions and various jurisdictions, how involved have you been, and how much of a priority do you feel that it's being taken in terms of from where you sit?
Okay, thanks, Jeremy. So that's correct. MTN currently offers mobile money, not only in Ghana, but in a few other named countries within West Africa, Cameroon, Benin, Côte d'Ivoire, Guinea, Liberia included. And well, we have a sort of financial service running in Nigeria. And over and above being a telco, we do put a lot of emphasis on mobile money now. Which is financial services. It's gone beyond, just the ability to send and receive money. Now, most of these opcos have moved into the advanced financial service range, from utility payments to merchant payments, as well as savings and loans. So whereas we have set the foundation in most of the countries in West Africa, and most of the countries that we operate in, we are now trying to expand that even further. Not only are we being inclusive, we want to drive literacy, financial literacy, we want to drive partnerships. It's something that we've been doing over the years and we will continue to drive as well.
Awesome, awesome. Thanks for that overview. Let me move to Ebele. How are you doing, Ebele? Can you hear me?
Yes, I can, yeah.
All right, let me pass the baton over to you. So I know that Altika focuses on Africa primarily, but it seems like you have priority for institutional and impact investments of a sort. So I just want to hear from your point of view, how you guys are including inclusiveness or approach inclusiveness from your space outside of Africa looking in. Yeah.
Thanks, Jeremy. So, I mean, so Altika Partners is a credit-focused African investment firm, and two of our main sectors of focus are financial services and technology. And I would say the bulk of our involvement in these sectors is actually trying to make sure that capital gets to where it's needed. And historically, if you look at the way capital or lending has been going on in Africa, it's been dominated by traditional banks. And one of the things we've been trying to do at Champion is to support a lot of new techniques and newer types of businesses and companies, whether it be digital lenders, whether it be payment companies, trying to make sure that we can support these companies, give them capital. So, because we often find that these newer technologies allow them to sort of leap ahead and ensure that the capital that's needed by SMEs or individuals gets to them quicker. So we're very focused on these areas. We also, one of the things we also try to do is to also measure the financial impact and the positive impact that happens on the back of financial inclusion. So, if we invest in a digital lender that then lends money to someone that has a hairdressing business, that business will also be creating jobs. It's allowing for people to potentially get credits. It's allowing, there are all the multiple benefits that come out of these sort of financial inclusion initiatives. So we like to support these kind of initiatives, and we think they're really important.
Awesome. That's really good insight. Obviously, you can't have financial inclusion without the finance part, the funding part. So it's very key that we have players like you in this segment as well. And I think that does make a lot of sense, and that helps a lot. Let me come to you, jumping off of what Ebele said. So we've noticed that more and more we're beginning to see financial service players who were initially focused on, let's say, the 20% included segment, increasingly come into the segment more and more. In your opinion, from where you sit, how have you seen the landscape of financial inclusion evolve over the last couple of years, but particularly in the last year with the pandemic, where we're seeing a lot of digital technological advancements happen to push the space? Has that in any way shaped, let's say, the way the banks are beginning to think of the inclusion and thinking of how to leverage these new emerging technologies to jump in? From where you sit, what has been your experience?
Okay. I believe that's for me, right?
Yes, that's for you, Kayode.
Okay, thank you very much. I think for the purpose of those listening to us, I wanted to say that it's important to just say what financial inclusion is all about. It's all about making financial services available to everyone in the society, every segment, in a way that is very affordable, especially the people in the lower segments of the market. So it's very important to just put that ahead. And I would say that at United Bank for Africa, that is something that we are deeply involved with. We've had Telco speak, and one of the things we've done here is work with all the stakeholders to make these services available to various users of the financially excluded customers, either through agency banking, which we do across all the countries where we currently are in West Africa, or through mobile money, we partner with. I have friends and colleagues we are here on the call together, professionals, which we are working with together on this. With COVID, with the pandemic is a reality that came, and what COVID had done is it has fast-tracked a lot of things in terms of taking advantage of technology to move financial inclusion forward. So when we talk about scale in terms of financial inclusion, I mean, technology it comes with scale. It allows customers, it makes customer onboarding quicker and faster. And I'll put this in clear perspective. For example, we have customers who want to bring customers on board, to sign them up, to make them financially included. We need tools like mobile platforms that can make this easy and available and quite more affordable, working with the agents that are being appointed to go and sign up customers, or for customers to use things like the USSD banking services, which makes it easier for a customer to simply dial a syntax *919#, for example, and customer are able to follow the menu to sign up on the platform. So like I said, the pandemic has actually made financial inclusion, is brought it forward. And I see this deepening more and more, especially where we also had to work with the multilateral organizations and donor organizations through the pandemic to make financial services available to people who are excluded before. And we did that working with them. Yes, they got paid, but in the process of getting paid, we also got them included by bringing them into the formal financial services and then empowering them. So that would be my comment on that. Thank you.
It's very insightful. I think it's very encouraging that we're seeing the traditional financial service players increasingly beginning to broaden that perspective. And I think a number of the initiatives you've spoken about, from agency, leveraging the USSDs, just lets us understand that consciousness is there and that willingness is there to improve that segment. So I was going to come to you, Arnie, because I just realized that as much as we have regulatory issues to discuss, we do not have a representation from the regulator. But I know for a fact that you work primarily with the regulator, so you will be our voice of the regulator. But let me quickly jump to Mark. John Mark, you have been in the whole fintech architecture space so far. And I think that as much as we speak about access, providing access to people who don't previously or haven't previously had access, there is something to be said about how this access to financial services is delivered. Now, there's a lot of emerging technology coming out. A lot of people are talking about big data analytics. People even talk about implementing blockchain and the like. But I just want to hear from your perspective, the architecture that delivers financial services. What exactly are some of the key priorities that you focus on when trying to venture into these spaces? Are some of these emerging technologies so far out into the future that they're not being used now? Or are there some readily available things that you focus on as low-hanging fruits in order to push forward into this space and include more people into the financial services space? What are your thoughts there?
Thank you. So the financial services space has been evolving over the last 10 to 15 years. Now, from where we started, we've seen technology changes, but I would look at it from two perspectives. There is what you, the consumer, sees. There is what we in the back end actually do to deliver what you see. Now, when we started with mobile-led financial inclusion, the channels that we've been using largely have been the USSD. Now, we are at an era where we are at the crossroads between the USSD and apps. So that's a change that someone does see on the outside. Now, in the inside, the things that we are focusing on from an architecture perspective are things like we need platforms that cloud first. Cloud first because we need to be able to run with hyperscalers. If you look at what we've had when mobile money, for instance, started 10, 12 years ago in Uganda, we had a subscriber base of less than 1 million. Now you have 7 million active every month. You come to our markets like in Ghana, we have 10 million active every month. Now we come to a market like Nigeria, once we get a license, we're going to have 50 million at some stage. Now, so you need an architecture which is able to scale from an infrastructure perspective. As your customers grow, as the services they use grow, you need to be able to scale. So one of the things we look at from an architecture perspective is that we need to be able to be cloud ready across the footprint. That's one thing that drives our architecture evolution. Now, people outside there may not see that, but when you have these kinds of campaigns, like our e-commerce players do, maybe one Friday they have a campaign and people are buying things and you see your app is being slow, your channels are being slow. That's where the element of the underlying infrastructure supporting this platform becomes very important. And if that infrastructure can't scale overnight, you realize your traffic is growing and you can't increase the memory, you can't increase the storage, then your platform falls under. So we need to be able to scale. Then we have what we call the API first approach. As MTN, we came to the realization that our strategy is driven on what we call a platform-based business. Now, for us to run as a platform, we need to have APIs. When you have a platform a business model, you literally have a core service, which you deliver so well, and then you let other players build services of your platform. So you let merchants, agents, banks, any bill payer to come to your platform and develop their own application. So for you to drive a cloud, a platform business, you need APIs. So one of the things that we are doing and we are paying keen attention on is the element of making our APIs available to everyone out there. You may be able to find something called momodeveloper.mtn.com. Other players have other portals that they're using for APIs. But primarily to drive as an example, Momo Developer is where we are exposing APIs publicly. Now, this enables an innovator who is still in school, maybe at university, a small enterprise which has one developer to go out there, not having to wait for someone in MTN to show them how their APIs work. They can go to the public internet, see these APIs, start to develop, and then maybe a week or two or a month, depending on their capability, they're able to join our ecosystem. Now, once they join, they're developing innovations. Some are developing saving applications, payment applications, lending, and so many applications that they're developing, which are innovations that are enabling those people that are getting accounts on mobile money to be active. So cloud and API are two very important things. Then data. We have been evolving our capabilities, like has been mentioned by my colleague Daisy. We've been evolving our capabilities, providing advanced financial services, saving, lending, and insurance. You might have seen in some of the markets, we have an insurance product, IO, where we're providing micro insurance to people you've never seen. We're providing loans product to people we've never seen with partners. Of course, some of our partners are banks and lenders like Jomo. So how do we achieve that? Data is at the center of that realization. And for us to actually get it to even a bigger scale, we need more capabilities in big data. Every time, whether it's a channel, if someone is using a USSD, an app, a web, that information is very rich. It can tell you the behavior of that customer, which you can be able to use to do your fraud scoring, which you can be able to use to decide if this person is reliable to give a loan or not, or to insure. If someone is making an insurance claim, you can be able to look at their behavior from the channels, from the transactions, and decide that this claim is genuine or not. So big data is very important for us. I can go on and on, but I think let me first focus on those three as key in what we do from an architecture perspective. Thank you.
Thank you very much, John. I think you shared so many insights, and I have so many follow-up questions, but I think I'll just rope them in and circle back to you as and when, or I'll basically split them between yourself and Daisy. But let me come to John Charles. So Charles, off of what Mark has said, the API-led model means that the telcos are being more open to partnerships. So they're inviting other players in to sort of build on the infrastructure that they have. And that whole decentralization essentially ultimately benefits that end customer, who in this case is going to be excluded. From a banking view, from where you sit, what is your perspective on partnering with other ecosystem players to include more people and to deliver this service? I know there's always been this tussle about who owns the customer and whether the person who owns the customer is even a factor in terms of being able to deliver to them. So from where you sit, how has, let's say, Standard within your region had to deal with these issues of partnerships, issues of customer ownership in order to be able to reach out more and leverage some of the technologies out there in order to rope more people in?
Thanks, Jeremy, and then thanks everyone for giving the opportunity to actually talk on behalf of Standard Chartered Bank to this panel. And again, thanks for the opportunity, because I think it doesn't happen often in this region, and all the panels are here. I think the contribution are very kind of at a very high level. So the only thing I can say is that first of all, for Standard Chartered Bank, we've since the get-go, I think we launched the application in 2018, and that was SC Mobile for the vision from the group. It was basically for us to contribute to the financial inclusion in the region. As a matter of fact, it's not just for West Africa. We've actually opened up in 9 countries in the region, and it was important for us to actually not do that alone. So coming to a question, since we opened, I mean, before we even opened, it was for us, before we even engaged the alliances, the partners and all that, it was very important for us to actually build the core capability ourselves, build an in-house capability that would have been able for us to control and then actually bring fintechs and other players on. I mean, as a matter of fact, partnership has been a very critical part of our launch. Since we launched it, we started with the telcos of MTN and Orange and all that. All these are telcos already integrated in our mobile. And currently, we actually speaking to many fintechs and all that to be able to offer the best to our clients. Because the end purpose of that is not just for us to kind of, just to your points, being the only player that cannot own the clients, but it's for us to contribute to overall ecosystem. Because that ecosystem is, we come in as a player, because today the digital world, it's expressed itself in a way that you can't just play alone. I mean, you just talk about partnership, you talk about ecosystem and all that. So for us, owning the client from the beginning, if we are participating in the KYC and all that, at that stage, the client is ours. But once you get into the ecosystem, it's the client for all of us. It is the client for the telco, it is the client for fintech that are actually providing us, even if particular acceptance capabilities, payment acceptance capabilities and all that. So my view is that the ecosystem is for every single player to play their parts and then to actually make the contribution as much as they can. And that's what we do with Standard Chartered Bank. And then SC Mobile has been the driving piece of this even since we launched. I mean, today, I mean, we've out of the 9 countries that I just mentioned, we're able to actually open up SC Mobile on all these 9 countries in the space of about 15 months. And in every single countries in Ghana, Kenya, Nigeria, and Zimbabwe, Uganda, all these 9 countries, partnership and playing into the ecosystem, that was the driving kind of agenda that we've been playing on. So this is our contribution that we can give at this stage. Thanks.
Great. Thanks for that. Thanks for that insight. So I think that my key takeaway from what you said is that you believe that it's sort of a joint responsibility and a joint ownership, and each player has their part to play. Each person comes together to make sure that they're delivering the best view for the customer. So the focus is on the customer and less on the institution behind it. I think that makes absolute sense. Thank you very much for that. Now let me come to you, Arnold. Now from what we've heard from Charles, Ebele, and Kayode, as well as from John and Daisy, the financial service providers are doing their part and have opened their minds up to the partnership. And you can tell that from the MNO point of view, there's a lot of investment and focus and prioritization going on in that, where all of these players want to come together in order to play their parts. Now, this is not going to be done in isolation. You definitely have to do this within an environment, and these environments usually are regulated. What is your perspective on how, let's say, regulation is evolving to support these partnerships or these creation of ecosystems to include more customers? Because as we know, the rate of adoption of technology and the emergence of technology usually runs faster than the traditional players. And we know that the regulators do take some time to catch on. So how have you, in your opinion, observed the evolution of regulation to sort of contribute or, let's say, detract from all of these efforts from where you sit, being that central person who is in the intersection of all of these players?
Thank you, Jeremy. And I wish I could take that credit. I see Daisy, I see John Mark, who I always have to revert to. I think I should have been come for approval before joining this panel. But really, thanks everyone for, I think it's been a great discussion, and I clearly have learned a lot from this session. At Jumo, what we primarily started off with was many of us started off in traditional banking, and then as keen observers of our environment, we realized some of the opportunities that existed with both the constraints and opportunities that exist in traditional distribution channels. One of the things is just like, how do you achieve reach? And the very linear definition of financial inclusion being access to financial services, because well known, for instance, we know that every statistic says that once people are financially included, there are certain benefits that accrue to them. There's a lot of empowerment that come to them, better planning, be able to protect themselves, and less subject to vagaries in their economic activity. And so, but then the question then is, if somebody then just opens an account, doesn't mean that they will accrue all these benefits. And again, if you look at the rates of sometimes dormancy and then other factors that could actually come in. So there is another interesting thing, which is trying to have like a product suite that touch on every segment of utility of the customer, that there's a place where they can save extra money as and when they earn a bit more money, that there's a place where they can go and ask for a loan, to support their businesses or to take care of some emergencies, that there is a way to secure the gains that they've made by appropriate insurance products. And so financial inclusion is actually, quite a broad subject. And so what we took on was to say, how do we leverage off existing infrastructure, existing existing resources that are out there? We realized that, for instance, that banks are really good at mobilizing resources, and banks, primarily are driven value by transaction, or by being the source of wealth. One of the areas that we could actually help out is with regards to a transaction, the value that's created through transaction. Whilst wealth is, it's actually, they always be the cheapest source of funds and also the largest pools of funds, we could basically pick the investments that's been made on the technology side by, the telco infrastructure, and then link the customer base on that front with bank capital. And that is the space that we've somehow defined ourselves to kind of occupy, and then offer more utility, and then more products to customers on the mobile technology side of things. The important thing there is that we are always, learning from what the customer needs. And so as the customer use these services, we're able to essentially figure out means and ways of reaching their very unique requirements, because again, different markets, different segments, different gender, different economic activity, everybody tends to have like, very, very different requirements. And so essentially with the technology that John Matt spoke about, and you, Jeremy, alluded to, like big data, artificial intelligence, machine learning, all of those things, it's helped us to hone in more and be able to provide more customized services. In terms of technology and like in terms of regulation, as you said, is always an interesting one because regulators sometimes take longer to predict where technology is going to go or where innovation is going to go. And it's always a sweet balance. If you have an overactive regulator, they can actually stifle innovation. If you have a regulator who is not also very active, they can also, in a way, allow innovations to actually run amok. And so essentially you need a regulator that's properly engaged, properly resourced, that they understand what they're doing within the market. They know what is happening on the regulatory front and so on and so forth. Fortunately for us, I think most of the markets that we operate in, regulators have been very forthcoming. They've been, in a lot of ways, they've been quite humble to learn from the markets in terms of what is happening. There are a lot of stakeholder engagements around that front. I think the best form of regulation when it comes to innovation is actually offering like some kind of guidelines rather than trying to be very strict on acts of parliament or acts of government, because those take time to be able to change. Whereas in guidelines or directives, there's some level of discretion that is often there. And so regulators that are very forward-driven see innovation as a positive and not see it as something that is fighting an existing structure. Because again, it's always important to understand why these concerns sometimes come about. It's because there is the fear that they're going to lose control of their authority over like monetary policy and then fiscal policy, and then protecting the sanctity of the financial system becomes a bit more difficult when you have everybody plucking and trying to do their thing. But I think one of the very progressive ways regulators have sometimes dealt with these things is working with existing partners. In our case, something like mobile money that have always been in the market, that is heavily regulated. At least with the regulation that is given, there can be some kind of self-governance or self-regulation, even within as an ecosystem level, like, whether it's by market conduct. I think I'm probably talking a lot, but there's probably quite a lot to go on about in this space. And then I think it's a very interesting, a very good topic. There's clearly a lot regulation. There's clearly a lot technology can do to advance financial inclusion. And there's a lot regulators can also do in order to chaperone the industry to grow and then become a resounding success for Africa.
Awesome. I think all of that was essentially very, very relevant, especially for me. What you highlight is that delicate balance of regulation needs to be there. An overactive regulator can be a problem. Also, a very lackadaisical regulator can be a problem. And I think that finding that sweet balance is going to be a determining factor. And hopefully we can get regulators, or the regulators are going in that direction. I think, thankfully, just speaking from a Ghana point of view, we have seen that our regulator has come up with sort of constructive and progressive policies like the National Inclusive and Financial Inclusion Development Strategy over 5 years. So you can tell that they are thinking in those terms and trying to make sure that they are not a hindrance, but they're also not taking their eye off the ball. So definitely very relevant topic. Now, I think that a lot has been shared in terms of the technology that is supporting from the back end, sort of the funding that needs to come in, the finance aspect. But I think that there are certain realities about trying to extend financial inclusion to a particular segment of customers who previously have been seen to be very risky. And I think I'll throw this question to either Daisy or John, but I really would like to hear everyone's thoughts on this. So for example, John, you talked about the back end that nobody sees in terms of the APIs, the infrastructure, sort of the things that need to be put in place. However, the technology that is in front of the customer, even as simple as USSD screen, like Kayode alluded to, sometimes it's not being well received. If you look at the statistics, you realize that even the disparity between the women and the men who use the technology, you realize that there's such a gap in terms of the uptake. What are some of the realities of trying to reach out to these customers that are not as evident, right? I already know coming from the bank that sometimes trying to bank these people or bring them into the financial services space in a sustainable way can be so difficult, even just because of their location or their level of literacy. So what are some of these realities that are not as evident that you are noticing when you try to advance financial inclusion to this space, right? I know it's a broad question, but I'm sure everybody will have their insights on this. So in your court, Daisy, any of you can jump on that.
Daisy, you want to go first?
Go ahead, John Mark. I'll come after you.
Okay. So when we talk financial inclusion in the broad sense, yes, we do know the reality is that if you go to our different markets, we have made advancements, but not everyone is yet included. That's a fact. Now, the question is, why are some people not yet included despite all the efforts? There are some things that I could say are inherent that we need to address as a society. For instance, there is talk about women emancipation, equality, whereby you come to some communities, and here in Africa, whether it's in Uganda or in Ghana, you may find some communities where a woman, for some reason, is not allowed to have a phone. Now, if you come to a community like that, where a woman is not being allowed to own a phone, that literally would mean that what we're doing for mobile-led financial inclusion, where these services are accessed on the mobile device, this woman can't be able to access that. Now, that's a problem that we as society have to address, whereby if it's a device, one, we have to make devices much more affordable, but importantly, from a society perspective, we have to drive that element of culture change that a boy child, a girl child are all equal. So if one can own a phone, the other should also be able to own a phone. So that's one thing that we need to address. Then the second is around the UI and UX. Now there is the element of many of our societies have not had the fortune of being educated. So there are drives, national drives to educate people, but historically, you might find my parents in their years, many people didn't have that opportunity. Even currently, while there are universal programs for education, they're still not as comprehensive. Now, you give someone a device, and maybe that device is in English. So what happens? They can't use it. They can't navigate your application. So there are efforts to try and improve this, making these devices with local languages, where it's applications. If you see, like from a digital front, Google, Android, they've done versions where you can customize to someone's language. Now, when it comes to channels still, we've seen the experience of people with IVR, interactive voice response, whereby those that may not be able to use, maybe to read or use the phones in their current way, they can at least use the voice bits of recognition. And their technology is very important to advance to better voice recognition, such that people who can talk through a menu, talk through with a device, it can be understood in their language and they get a service. Then there is the other element that I will talk about that is still leapfrogging, or keeping us back from full financial inclusion, has been interoperability, whereby you realize that in some markets, if you look at it from a mobile perspective, you have maybe a player like MTN, Orange in Cote d'Ivoire, Airtel somewhere. You may possibly have 2 big players or 3 big players. But if you look at it from a mobile perspective, movement of funds across the ecosystem has been a little bit closed loop. Now we need to move to an open loop kind of ecosystem. This is very important, that if someone, for instance, if my mother somewhere receives money from me and her number is from a different network, she would maybe be challenged to try and make a payment to a merchant who is not of her network. So you realize that for us to have full financial inclusion, we need access, we need usage. So people receive money, but they can't use it on our ecosystems because they go to a merchant, one is MTN, the other one is Airtel, they go to the other merchant who is different network, they look at it as not practical for them to move money. So it kind of creates a situation whereby the movement of funds, because it's not interoperable, doesn't enable us to include everyone. I've seen cases when it comes to our banks, whereby we haven't adapted what we call instant and inclusive payment systems. most of our people in our economies live on small amounts. I get $10 today, it's what I need to consume that day. I get maybe $100 in a month, is what I need to run in a month. Now, if I go to a bank, I've seen it practically, I go to my bank account, and I need to move that money from my bank to maybe a different account in a different bank, and they tell me we get it the following day after we've done whatever checks. Now, my mind then, because I need that money instantly, is I can't do that. I rather go withdraw it cash and then move it, or I rather move it to mobile wallet, then move it to other account. Now, it makes it more costly. So if someone was supposed to be a farmer somewhere and they realize they have to do things this way, they put money in a bank account, but for them to get it maybe on another provider where they need a service, it's going to cost them, it's going to take time. They will be like, I rather keep my money in cash. So they don't bring the money to the ecosystem. So these are things that we need to improve to see that more people who have different reasons for not connecting to the digital ecosystem, to be financially included, can also still come on board. Thank you. Daisy, maybe you may supplement on that.
Thanks, Jem. Yes, you've touched on most of the points. I think the only one additional one that I want to highlight is the issue of cost. So when Arnold and team and even the banks go out, customers really scream about the cost. However, I think I see that customers who don't complain about the cost are not seeing the benefit that they're getting from it. You'd, as John Mark highlighted, I want to go to the bank, but there's that 1 day delay. If I was able to do it on my phone and I'm charged a small amount for that, ease of transacting, it would make things a lot easier. So I think the only additional point or misconception that we see is, I think that we need to drive as financial service providers and in driving financial inclusion is, how do we drive the benefit instead of really talking about cost? All of this is to the benefit of the customer. I know we're all out there doing businesses, but however, the key that we're driving, or the point that we're driving, is how does this person understand the service that they're getting? What benefits is it to them? And how do we make their lives better?
Awesome, very good insights. I think the two of you have shared some really, really good insights. So essentially tailoring the products to the customer segment and make it relevant, make sure that there's interoperability for ease of transaction. And then, like Daisy said, drive the benefits just so that the customer is the focus, so that they understand why they are getting this. Now, I think I'll throw that back to my financial services sector players. So Kayode, Ebele, John, you can jump on this. As much as you want to make sure that it's cost efficient for the customers in these inclusive markets, and that is why we're leveraging these technologies and all, we do understand that in order for them to be banked sustainably, it has to be essentially profitable for the institution providing that funding, if in this case it is like yourselves, the financial service providers. But what are some of these things that you look for before deciding that we are going to take this bold step and go into a segment that we previously considered risky? What has happened to inform this change? And how do you look at this segment when you make a decision that this is a play we want to make, without considering it a corporate social responsibility move, but something that is going to be basically a long-term thing? And let me start with you, Kayode, your thoughts on that. And then John, Charles, and Ebele can weigh in.
Okay, thank you very much. I like the perspective that Daisy actually ended with, and I'm going to take it from that, because the beginning of making whatever you're doing with customers sustainable is starting from showing customers the benefit. When you sell the benefits to those customers, then it makes it lots easier to actually eventually grow that product sustainably. And I will start by first mentioning that, so in financial inclusion, everyone in the ecosystem must first realize that it's all about win-win-win. So I use win-win-win 3 times, because the first one is for the customer, the second for all the stakeholders involved, and the third for the regulator or whoever it might be in the chain. So for us as an institution, I think I will speak on the opportunities that actually exist in this space. If you look at West Africa today has over 400 million people across West Africa. In Nigeria, there are over 200 million, and then goes along each of the country. Now, if you look at the average percentage of people financially included, if you take Nigeria, for example, it's at 40%. And if you look at the other countries too, I mean, it's not so high. So what that means is that if you look at the underserved segment, there's a lot of resources, there's a lot of transactions going on in that place that is not even shown or passing through the financial sector. So that's one. Firstly, it's an incentive. There have been research done by some of the known foundations globally showing how much goes on in the background in terms of transactions in that space. So for us at UBA, one of the things that drove us to that space was trying to look at what is going on with these people. And looking at that, recently we actually at United Bank for Africa conducted what I will call human-centered design research, HCD, to look at the people in this segment. Okay, what is their behavior? What kind of products can we take to them that will make them do business with us? So for us, that is always the first point of touch, because we know that when we take that feedback and based on that, bring out a product for them, most likely it's going to be sustainable because it's going to be driven by them. If you look at the demand and supply sides of financial inclusion. So you have the demand side, which is the customer, you have the supply side. So when you give a product as a supplier, then it gets good buying from the financially excluded people that are now coming into financial included space. So for me, I will say that the approach is to check to know what are they looking at, and there are various ways we do this. There's what is called focus group approach, and we've done this with those customers before, where we assemble a number of them. We check what are the things, what are their thoughts, and I will give a good example. There was a particular project that was done, and there's a product that was to be launched. They were invited, and exactly what John Mark said. They looked at the USSD menu, and they said, this is not going to work for us. Just a cross segment. They said it's not going to work. And then we asked them, what do you think will work? They said, okay, change this menu, change for airtime. We can't buy high value airtime. We want small amount airtime. We can buy over and over as we get the money. And those changes were made before the product was released, and it made a lot of impact. Now, why I'm sharing this is because for financial inclusion, the demand side drives the supply side. When that happens, it becomes sustainable over time. And again, what is putting into the infrastructure setup in terms of digital financial services, in terms of how customers are onboarded on the platform, those are vital things to put into consideration. One of the things we also found out is that the customers in this space we're talking about, they actually prefer having some bit of interface with humans than just the devices. So it's okay to start with that human face and then graduate to the digital financial services, which we know with time and scale is going to be much more sustainable and make the business grow faster. I think I will stop at that for others to make input. Thank you.
Awesome. Thank you, Kayode.
Can I come in, Jeremy?
Yes, you can jump in. Yes, jump in by all means.
All right, thanks. I think my previous panelists have said it all. I think I just want to jump up in the point that Daisy actually mentioned when we talked about the benefit to the clients. I think that says it all, because obviously I think Someone just earlier talked about the focus group and all that. I mean, it's all what the client wants. And at the end of the day, whatever segment you want to tap on and all that, you need to understand what exactly they want. And everything that you do as a financial service provider, you need to make sure that it meets the demand, because you can't start with pushing the product and they expect that it meets the demand. So you have to start the other way around. What we did is just to share an experience here is that we run through some focus group. We also run through, even currently, big data analytics. This is something that we do to improve the services, and then even trying to go to predict what the client would do at the next step. But what I'm trying to mention here is that we're talking about financial inclusion, and financial inclusion goes to the way where you are reaching the segment, just like you said, of clients that were not naturally coming to the banks. So basically, I mean, financial service provider, basically, we as a new financial service provider, we're changing our models. We are changing the model from bricks and mortar all the way to actually a digital, entirely complete end-to-end digital capability. And just to give you an example, for SU of Standard Chartered Bank, for instance, we were not going to go with, okay, let's bring out a front-end application which will provide with some services and all that. But we said to ourselves, okay, what it is that the client wants today. The client doesn't want to go to a bank to queue. The client doesn't want to go to the bank to branch home, to actually be sitting there and then wait for someone to actually come in 30 minutes and all that. By thinking through today, the application that we actually bring it out there is, when I say end-to-end, I really mean end-to-end digital. And the Global Finance Awards that we've received over the period of the last 3 years, 18, 19, and 20, I mean, that said it all, because from the onboarding stage to even the exit stage, the client can actually bank with us without even seeing a bank staff. That's basically what we're offering today. Meaning that the client can open his account, receive his bank Visa card, MasterCard, whatever you want it, receive his bank cards, bank with us, transact, make transfer, payment, receive pay bills and everything. And even after 10 years, exit the bank if he doesn't like the service of Standard Chartered Bank and all that, without having to even see a bank staff. Only if we want to maybe make a call to the banks and all that, there's a call center for it. I mean, basically what I'm trying to say is that we are trying to mirror the overall traditional workflow of the service of the client into the digital capability. That's something that we do. The other thought around that is that we thought about the user experience. And to be honest with you, I'm glad to talk in this forum about user experience, because user experience is something, someone actually mentioned about focus group and all that. That's all comes with user experience. And the user experience that we've been able to actually accelerate and enable today, the feedback that we are receiving, clients are even kind of moving to the next stage of enjoying the application that we do. Someone talked about customer literacy and all that, being able to reach and all that. Today, with the user experience that we are providing, we're using symbols. A lot of symbols are being used. Think about, is that symbol being able to understand by the client? So someone who doesn't even read today, because most of our population, we are in Africa, we know what it is. Not everyone can read, not everyone can say, okay, this is payment, this is, but the symbols that we use a lot of symbols that makes the user experience and the journey shorter for the client as well, so that he's able to actually be engaged. So that's all about financial inclusion, and that's what we do every single day. And again, it brings down to the element of benefit to the clients, which is the reason why we're living here as a financial service provider. Thanks, that's my contribution. Thank you.
Awesome. Ebele, you want to jump on here?
Yeah, I mean, I have a slightly different take on this, and that's maybe because I'm coming from an investing side, right? You know, sometimes just because a client wants something, the customers want something, doesn't mean you should provide it, and you should only provide it when you're ready to provide it. And you know, in our experience, we've seen a lot of situations where a new product is launched, it's customized, overly customized for the customer. It goes well the first couple of years, and then somehow down the line, default rates spike. There are you know unpaid liabilities. There are issues, obviously, in terms of scaling, because one of the benefits of the digital of the digital space, as well as, you know, when you're financial inclusion, is that word can spread very quickly, right? So suddenly these products, these new products can scale up really quickly. And before you know it, the implementer, whether it be the bank or the fintech firm or whatever it is, starts to scramble to try and meet up with the demand. And so one of the things we've also seen, and I agree with what Kayode said earlier around, you know, the human touch. Yes, you know, you're trying to move away from people going into branches, but supporting these initiatives with the human touch of, say, for example, calling up the customers regularly to let them know that you're seeing, well, you're aware of what's happening with their account, whatever deadlines they have, confirming transactions and things like that. Might sound as an extra expense, but those are the kind of things, the additional touch, which that we've seen can make it really make a difference. So I think from our perspective, we're coming at it as a, we're putting our money down. Risk management is critical. We're not a bank where we have a lot of knowledge on the individual clients. We've seen a lot of innovative methods where, whether it be sort of cooperatives or groups of, there's been a lot of experiments on market traders and so on, and how they all work together to collaborate and reduce the risk on lending amongst their members and things like that. So I think when we look at these things, we're always conscious of unfortunately what could go wrong, right? Is this technology the right technology at the right time and the right place? What are the regulatory risks? We spoke about regulation earlier. Does the regulator understand? What are the potential new entrants to the market? Yeah, you may have spent a couple of $1 million launching this thing. Is there a moat around your business? If one bank launches something, could 5 or 6 other banks suddenly launch that same product, and effectively what you thought you had a unique edge is not your edge anymore. So I think we just a more measured approach in terms of customizing, launching new things, but customizing them, but also making sure that there's a scale very quick. There's ability to scale and support the growth is very important from an investing perspective.
I think I totally agree with that. I think you said a number of things that we can take back. So basically, you essentially have to pay attention to the long-term the customer life cycle value. You need to use tech as a tool, but also not get ahead of the customer, right? And you also have to imbibe that human touch, in the sense that you're dealing with customers whose probably their best idea of what an investment is probably buying a goat or a cow, and now you're trying to convince them to do this abstract financial service thing like an account where they can't really get the value. So you can't expect to be sending SMSs and that is going to communicate that. So definitely, I totally agree with you. And I think that before I go to my round of final thoughts, I know that a focus on the long-term customer lifecycle value is something that, Arnold, you like to talk about, in the sense that most people assume that as long as you have demand, and then you also have the technology and you have the funding as a supply, then everything is done. But like Ebele said, sometimes people start off and it takes off on a high, but then you begin to see a decline. So can you touch on how important it is to think about that long-term customer life cycle value and the kind of things that can be implemented in order to make this sustainable in the long term, even as tech is being imbibed in this? Before I go around for everyone's final thoughts on this entire subject. Arnie?
Thank you, Jeremy, again. I think maybe to start off, that the business case for digital financial services as a vehicle for driving financial inclusion has already been made. There's, customers have come to appreciate this as, a natural way for them to access. There are some legacy issues. There are some issues that needs to be, social and legacy issues that need to be addressed. Like we've talked about, AI-based discrimination like, the way maybe males behave, sometimes not the exact same way females may behave. The way market traders behave may not be the same way like, a peasant farmer would behave. And the thing about AI, which is often to, look for a trend and patterns, and how that can eventually sometimes lead to unintended biases. So that's clearly something that we have to, as participants, we have to keep an eye on. In terms of, in terms of the actual product cycle itself, and then customization of product to the market, I think, again, this is another very important point that, every actor has to, keep an eye on. One of the things is making sure that there's enough research constantly with the customer, making sure that you can speak the customer's language, and then having the right polls and tests to be able to identify when maybe customer needs have changed. In terms of life cycle, again, someone just gaining access to a product, the way they behave, the kind of needs that needs to be met are not exactly the same for somebody who has probably been on, a product for a longer time. So being able to adjust and then come up with the right product fits as and when, one customer gets more exposure, is better educated, and now needs more sophisticated or more sophisticated services is really important. And then, of course, another important thing then becomes like, there's always a kind of like sometimes business people struggle with this, which is that you are sometimes cultivating customers for the general market. And I think it's a good thing, because you take on very risky customers, you do a lot of the pioneering costs, you develop the market, and then other people kind of like, and these customers now become, profitable, less risky segments for other participants. But I think the important thing is, irrespective of the cycle, irrespective of the the lifetime of these customers, there are always specific products that should be developed for those segments, and every player must look at it like as an ecosystem approach in terms of developing customers, onboarding customers, all the way to sustaining very healthy ecosystem for the partner.
Awesome. Thank you very much, Arnie. I think today we've heard a lot of things that are very insightful to the space. And I think that there's a lot that we can take back. So like Arnie said, the business case has been made. And from what we've heard from John, Daisy, the technology is available, right? We've heard a lot of the technology aspects in terms of the platform-led model, big data and API and partnering. We've heard from John Charles about how we need to all understand that we each have our part to play, and there is no one owner of the customer, and we all have a responsibility to do this. Also from Ebele is that the technology should be harnessed as a tool, and we shouldn't just assume that the scalability is going to be there right off the bat, and we need to make sure that we're making products that are relevant to the customer and are scalable. And we've heard about how to make sure it's customer-centric. Both Kayode and Daisy have harped on that. Essentially start off with what the customer wants and needs and what is relevant to them in terms of how they perceive the product in terms of value, and then work backwards towards the product. And finally, from our sort of pseudo-regulator, Arnie, how it's important to have that sweet balance between an active regulator and a lackadaisical regulator in that sense. So I think all of these come together to sort of make the point that technology can be further used to advance financial inclusion, but there has to be a lot more customer centricity, because technology is the tool and not just the strategy. And we also have to make sure that we're focusing on the long-term lifetime customer value in this sense. So I think just a round robin before we close off, your final thoughts in 15 seconds or less on the subject. Let me start from Daisy as usual. What are your final thoughts on this subject?
Thanks, Jeremy. I think you summarized it quite well. Technology is the foundation, and we're achieving what we're achieving and continue to achieve because of technology. As MTN, we'll continue to work with, we'll continue to drive and partner with innovators, We'll leverage on the scale that we have, on our brand, on our network and the infrastructure that John Mark has talked about. But you're also correct, we cannot do it alone. It's in this space, it's an ecosystem. So I wouldn't be able to do services like bank to wallet or wallet to bank without UBA, Standard Chartered, and the rest of the banks. I don't have the propensity or the capability to do lending at the moment, so I partner with the likes of Jumo. So we will continue to work with partners, strategic partners, to open our platform via open API that John Mark touched on. We'll continue to provide not only for consumers, but now there's a lot of SMEs. Someone talked about market traders, women in the villages, different people doing different businesses. So how do we, as you have rightly put it, continue to look at that? And I believe, one, yes, we can do it in our own little cocoons, but I believe when we look at the ecosystem and the platforms that we have built, we'll go farther if we go together.
Awesome, awesome. You want to follow up on that, John Mark?
Thank you. I thank you for the opportunity to share my views on this topic. In summary, I look at us as the different players, that the key thing that we need to drive financial inclusion is we should be ready to collaborate and also to compete. Collaboration is on building the rails, the infrastructure. I talked about things like cloud first, hyperscalers. That's really sharing infrastructure. So our regulation should be able to allow us to do things like in the cloud. Now, building the rails, I see in collaboration, if you are going to achieve things like interoperability, building interoperable, instant and inclusive payment systems is expensive. So banks, telcos, all financial players with the regulators need to come together and collaborate on building the rails that drive interoperability. And then, of course, as businesses, we would compete. We share the infrastructure, but we would compete favorably on the applications and the accounts. That's where the customer focus will differentiate what Stanbic, Standard Chartered, or EcoBank, UBA provides versus what MTN or Airtel and Africell provides. So we can compete and together drive value for all our customers within Africa. Thank you.
Thank you very much. Kayode, you want to jump in here?
Yes, and I will also say thank you for this opportunity. But I want to, so on my final thought, I will ask a question, then make my final thought. What will financial inclusion look like in 2025 in West Africa? What will it look like? How far will we have gone by 2025? If you look at average age in West Africa, today is, according to World Bank, is at 18 years. So what that means, the average age, if it continues on that trend, maybe by then it should be at 22. So for me, technology is very critical on every of the thing we do, because we need that for scaling. Mobile first is a strategy that will have to be at the forefront, because with mobile, looking at that age band is something, that has to be reckoned with. There's huge proliferation of mobile right now across the globe. So for me, that is very, very critical. The second one I want to talk about is regulation. Engagement with the regulators is very important. We talk about sustainability, but I will also say the business cannot survive without the right regulation, because regulation can come with a policy that will take everything down the drain. So it's important to engage regulators, carry them along, because we know sometimes they are not ahead as they should. And we've done that at United Bank for Africa across various countries where we do business, and we've seen improvement, and the way the regulators work with us has significantly changed, and also has helped in the different markets where we operate across in the 20 countries where we are in Africa. I think the last one I will talk about is collaboration and customer, following customer behavior to take proper decisions. So for me, it's those four: mobile first, and again, importance of technology for scale, The second one is regulation and their importance in this financial inclusion journey. The third one is having collaboration. We are all here today. The telcos have a role to play, the fintech has a role to play, the investors have a role to play, the customers have a role to play, the regulators have a role to play, and all have to work together to make financial inclusion a force to reckon with in years to come. Thank you, that will be all from me.
Awesome. Thank you for those insights, and you've given us a lot to think about from now to 2025. Ebele, your final comments?
Yeah, I think I'd just like to say that, I mean, without being unfair to the big banks and telecoms on my co-members, that there's a lot of interesting things and technologies, we are seeing and being developed in, outside the big institutions. And I would echo a lot of what Jean-Marc said around, collaboration and utilizing infrastructure and bringing these guys in to really accelerate this whole push on financial inclusion, because where we said there are a lot of new innovations and newer technologies which could assist in sort of leaping forward, that we see that some of the bigger institutions are a little bit slow to bring on. And for us, I think this sector is probably one of the fastest growing, will be the fastest growing sector in, at least certainly in West Africa, because East Africa has already done very well. And yeah, I think it's an area that's not just participants, but also investors should focus on.
100%. Seems like collaboration is going to be the key thing to harnessing the technology. Jean-Charles, final words?
Yes, final word. I would not go on to repeating what my colleagues have said, but the only thing I just want to mention is really about that we are in the right business today, just as a financial service provider, and the key things that we need to keep on focusing on is a learning curve. We are not at a stage where we believe that we capture everything. Yes, it's been mentioned that technology is a tool for us to drive it. I also agree that the human aspect is really important as well, and that's what we also built in our journey with the clients, although technology is the premium part of it. I would say that learning, just like I mentioned, is a continuous learning, because the discussion that we're having today, even the position that we're having today, might even change in 6 months' time. COVID is a good example of it. We don't know what's going to happen. We don't know how the client's behavior will change. So financial inclusion methods and approach and all that will change. But I'm very hopeful that today in Francophone Africa, we are about 25%, even 35% when you include the telcos in terms of financial inclusion rates. I'm very hopeful that with everything that we've done today and all the financial service players that are playing today, we should be able to reach that rate of by 60 or 70% in the next 5 years or so. So that's the pitch that we're going through. And then thanks for the opportunity. Thanks a lot.
Thank you as well for those points. And finally, can we have Arnie?
Thank you. Again, I'm absolutely privileged to be here. Maybe the first thing I'll say is that I think there's a natural partnership between fintechs and then banks. If you look at the 2020 global McKinsey Global Payments Report, it clearly shows where growth is happening. Growth in the banking, in terms of the revenue lines of banking, the biggest points for growth is actually within the payment space, which is mostly an area that fintechs have played an important role. And you look at a place like Africa, where payments seems to be the thing that's driving a lot of the innovations, a lot of the developments we see. The point for me there is, it's quite a great opportunity we have to be able to make a real big impact in driving financial inclusion across Africa. Collaborations would definitely be key. There are multiple strengths that we've learned over the years, and where the legacy frictions have emerged, and we know where these things come from. I think there are there are refined models around how we work together, for the long haul. Primarily what we are doing is good for everyone. It's good for people who are not, included. It's good for our mothers, our sisters, our brothers who are probably not as privileged as ourselves. So it's really important that we can go back and do what is good for them. So thank you very much.
Thank you very much, Arnie, for those final words. And thank you all for participating. I know that this topic is a tough one to cram into an hour 30 or an hour or less, but I think that a number of amazing insights have been shared, and it's really great to have the different perspectives because it all brings it all to the fore where we can basically make improvements. So thank you very much. It has been my absolute pleasure moderating this panel, and I do hope that we stay in touch and keep that group chat alive so we can continue to share ideas. Thank you very much for taking the time, and I will bid you a good day. Over to you, Snezhina.
Bye-bye.
Not much to add besides thank you, everyone. Really, really insightful. And I really hope, as Jeremy said, that, we continue the conversation over WhatsApp and, develop something out of it more. Thank you, and all the best.